Hello and welcome to the Common Sense podcast by repeating. My name is Ayush, and we have Chaitanya, Sagar Lele, and a secondary Sagar on the podcast for this week. We have Sagar Singh Setia, the founder of Marquee Finance, on the panel today. Say hi to everyone, Sagar, in your voice.
Hi everyone.
Sagar will be explaining what he does and how he's been on his journey through the course of the podcast. But he has a newsletter that he runs as well, which will be in the description below for you to check out later on. But his particular presence in today's podcast is essential to the topic that we're going to discuss today, which is basically India and China. Now, in essence, let's take just the past year in context. The Indian markets have seemingly done really well, among the top five best performing indices in the world, with about a 21-22% if we take a 1 year period from today onwards. Whereas the Chinese markets, or the Hang Seng Index, has been down 27% in the past 1 year. And in fact, in just this year, while the Indian markets may not have moved as much, the Chinese markets have in fact dropped by about a 6%. A lot of news has been around why China has been doing as poorly, and our Chinese expert, or rather expert on the Chinese markets for today, will be Sagar Singh Setia, who will be explaining a lot about the history, culture, numbers about why China has done well and why it may not have been as fruitful in its efforts in the past couple of years. But again, just I think the whole Amrit Kal word has been ringing in everyone's ears for quite a while now, ever since Sita Raman mentioned it in last year's budget. And the next 25 years are seemingly very interesting for India. I think the context setting for India's pivot to become that superpower has already been set over the past couple of years, whether that's a lot of foreign exposure coming into India or the MSCI index recognizing India's position as an emerging market superpower, whereas China's relevance or China's position has been on a deteriorating scale. So I think we can talk about all of that in context and talk about a few things in terms of an overall macro environment as to why things worked, why things didn't, and what that holds for in terms of future outlook for China and for India. So the Sagars can take it away by beginning this conversation.
Yeah,
Either of the Sagars can.
I got distracted. So, no, probably it would be good, Sagar, for you to maybe start with what was behind China's success in the first place. Right? I think people have been talking a lot about like India, China being like the next superpowers and stuff like that. But before the last maybe 5 to 7 years, India was nowhere even close to being a contender when it came to China's growth and progress. So, what was China doing so right in the last many years that it became such a force to reckon with?
So we'll go back in history a bit. In the 90s, Chinese government took unprecedented steps, right? So this was to take millions of Chinese people out of poverty. The same thing that we are doing today, they did it 3 decades ago. And to do this, they focused on infrastructure. So they started building highways, roads, airports, railway stations. A lot of focus was done on infrastructure. Billions of yuan of money was spent. This was upgraded in 2001. As we all know today that China is the manufacturing hub of the world. So how did it come in the first place? It was in 2001 when China was inducted in WTO. So a lot of trade or the globalized world that we see today happened post 2001 as the trade barriers ended and the free flow of goods was started to move between US, China, and the West and the East basically. So when you see the real wealth, when you talk about per capita GDP, this is built only when when a country moves into a manufacturing powerhouse. So just to take the numbers, China's per capita GDP from 1990s to 2000 doubled from $1,000 to 2000. But beginning in 2001, we saw a parabolic increase. 2001 to 2010, it tripled 2000 from $2,000 to $6,000. So this was also possible because of the demographic dividend they had. A lot of young population, millions of young Chinese, cheap labor, the favorable government policies, A lot of foreign capital flowed inside the country. So from 2001 to 2009, we saw a huge bull market in even Chinese equities as well. So when you see the graph, you will see a like a dot-com bubble in 2001 in US. It was similar for a long 8 years in China. What we are seeing today in Indian equity markets, China witnessed 2 decades ago. So this was till 2010, but the problems began post the GFC, Global Financial Crisis in 2009. What happened that from a manufacturing hub, the investments in China started to flow in the housing sector, and it was not only investments; it was done by taking unprecedented level of debt, lot of leverage. So developers took a lot of leverage, and the government focus was on the housing sector. Now, when we see in the east, like in India and China, we don't have social security net. So after 60s and 70s, we rely on our savings, whether it is gold, housing, equities, FDs. Similarly, in China, a lot of money of Chinese people go into the housing. So everyone there owns 2 or 3 houses, and that was the investment model that followed post 2010. And the problem started when she came into power in 2014. This has to end. Okay, so you can't take on leverage and start and go on building and building. This ended in 2017 and 18 with Evergrande, the developer that we know, $300 billion of asset
Yes.
and liabilities they had, and they went bankrupt, and that entered the housing bubble. So this is the history, brief history about how China transformed from uh, a manufacturing hub to and then went to the housing cycle, and then we got a burst. And just imagine you are in China, okay? You have your all investments in housing. Equity markets are at 2 decade low. Your housing, even some houses are not, millions of homes are not completed. You can't invest in crypto. You can't invest in foreign shares. Just imagine the amount of frustration that you will have. Your all investments are dead. This is what happened. This has happened in China in last 2 decades, and that's why we are here today.
Right. There was an interesting point you mentioned about like how China started off with infrastructure development and then hopped on to the whole manufacturing bit. Almost seems like India got a playbook ready in hand, right? And I think multiple nations have sort of seen that progress or that same pathway, if you may. So while I think there's a lot happening on the infra side in India, very tangible, very visible in terms of benefits as well as development. What do you think China did right when it came to manufacturing that probably India can also replicate?
So we have 3 to 4 things. First is the labor part that I discussed. So the cheap labor, and you have labor reforms. So when any incident happens in China, it is a closed economy. It doesn't go out, and you don't get strikes, and the wages, the pay raise is limited, and you have a structure basically for the labor, all the labor part. So we need first of all labor reforms in India to do it right. Second, the capital, the foreign investor, they should feel secure. Suppose if someone is investing 2, 3, $5 billion in India in the manufacturing sector, and he wants to take the money back home via dividends or take the money back home via other venues, he should feel comfortable. The law should be in such a way that he should feel comfortable. Second thing. Third thing is that we have seen that Modi government in the last few years launched the PLI scheme, right? So it should not discriminate between different groups. It should be for everyone. It should be the same. So these 3 or 4 factors, I think, India should take from China, which help them to become a manufacturing powerhouse in the world.
Got it. Got it. And in terms of demographics, while at least there is a parallel you can draw in terms of population, or I mean, in terms of numbers or age of population and stuff like that, how do you look at um, how the manufacturing hubs were set up in China and how there was labor availability for the manufacturing sector, probably away from agriculture. Do you see agricultural reforms also as necessary in terms of that movement from agriculture to manufacturing for people to happen?
So yes, that's a very great point, and I would talk about India in this context. What is happening? So I think in the UPA two regime or UPA one regime, Mahatma Gandhi National Empowerment Scheme was launched, NREGA, which is called commonly, right?
Nirega.
So we have monthly benefits to the labor. The days they work, they get the income from the government, and that has discouraged people to move to the manufacturing or even in the tier one cities. So we saw migration post COVID from tier one cities or the urban areas to rural areas. Government increased that Manrega amount significantly post COVID, and that discouraged the workers to move back home. What happened? That increased the cost of labor for the manufacturing industry. Second is the skilled part. Okay, so in India we have a lot of labor, right? But the issue is the skill. The skilled labor is in shortage in every industry. Whether you talk in the services sector, in the IT sector, or in the manufacturing sector, if you talk to businessmen, to industrialists, they will only say one thing: there is a lot of people in India, but they are not skilled. So we need to develop institutes to skill them in their own niches, right? And then you talked about the where the manufacturing hubs can be developed, so that so we need to have power availability, water availability. Then certain industries like chemicals, they generate very hard waste or waste which needs to be
Exactly.
treated properly, so that we develop we develop as a country, but don't cause pollution, which in the long run our grandchildren would say what we have done, right? So we need to have a whole framework. First, suppose I'll talk about the auto manufacturing sector here, right? In India, Chennai is the hub. You have got a port connectivity, right? You have got favorable government laws, tax benefits that the government gives, and then you have the skilled labor as well. So that is why in India we have concentrated auto sector only in two places, Tamil Nadu and Gujarat. Gujarat is an export hub due to Mundra port. So we need to see a lot of factors. Connectivity is also one of them. And for the labor part, I think the wages in the agriculture sector should not increase too much, and they should be in limits. So Manrega should be fixed, and such that our manufacturing is viable. It shouldn't be that if we are hiring laborers for just for example in the construction sector, my background is from real estate, right? Post COVID, the cost of labor has gone from 500 rupees per day to 1,000 rupees. It has doubled. So it should be controlled. So we have the first part is the skill, second is the cost. So that when we talk about China plus one, we are not alone. We have Indonesia, we have Vietnam, we have Mexico. Mexico is proximity to US makes it favorable, right? So the cost of connectivity reduces there. So we have to take in all the factors, and then we have to develop a framework, and that is why labor reforms are necessary in our country.
Yeah, so from what it looks like, it always sort of comes down to, while the narrative sounds great in terms of manufacturing is, the next big thing, etc. Uh, there's got to be a gestation period, right? There's got to be a period where uh, policy initiatives are larger than action, infrastructure and connectivity and reforms and stuff like that. The whole, I think, skeleton coming into place will take a while before you see that 3x kind of growth, right? Which again, China also, as you rightly pointed out, went double in 10 years, and then the next 10 years it went sort of three times.
True.
Uh, yeah, fair enough. Do
So we've
something about the.
covered. Sorry, no. We have covered demographics, I think, and we've covered a lot of aspects about how that is played into both countries, either reaching a certain level of success or that success plateauing or then deteriorating at some point because of uncontrolled or lack of control previously in terms of a couple of factors. But at this point for India, either of you, of course, uh, what do you think is a couple of things that we can learn? I think what we've already learned from this conversation has already been derived. But what can we do differently so as to not encounter a similar problem 2 decades down the line?
One of the factors is definitely that, at least from the last budget, what appears is that the government is at least cognizant of um, a deficit problem and is
Right.
working towards fixing that. And when there was a need to provide stimulus, they did step in. Now that the need sort of looks a little diminished, they're focusing back on prudence.
Right.
So I think that at least appears a little encouraging in terms of saying that we're not gonna borrow to no limit. We're not gonna
Yeah.
let the deficit flow out of control. There are some guardrails in place which there is an effort to at least stay within. So I think if that framework is continued, if prudence is maintained, then it should work well. Um, that's at least what I
Right.
think from a fiscal policy standpoint.
Yeah. And other Sagar.
Yeah,
Yeah.
what I think is that China encountered structural issues.
Yeah.
Demographics was one because as we all know that the one child policy was eventually will lead to a declining demographics for them, and that came at a very wrong time when the property
Right.
bubble burst. So last 2 years, the number of deaths has exceeded number of births for the first time in, I think, first time ever actually. So that has led to declining population, and some people are calling this as a balance sheet recession that is occurring in China. So I just wanted to talk about balance sheet recession that happened in Japan, now happening in China, and that I think India as a nation should avoid in the future. So balance sheet recession is that when when the non-financial sector that we call the private sector uh, has taken too much leverage and they don't want to invest further, they want to reduce the leverage. So this even happened in India. So if you know about the housing sector from 2003 to 2007, we got a huge boom. And in our macroeconomics, we call that housing always leads the business cycle, right? 2009 to 2013, we again got a huge boom. And that was because the fiscal deficit increased largely from I think 4% to 8% post GFC, and government took on unprecedented spending. And post 2013, we got a huge recession. I use word recession in the housing sector. Prices didn't move for the next 7 years. That led to declining consumption. We see rural areas still struggling because incomes are low. The housing sector always leads the economy, and that we are seeing even today. 2020 post COVID, again, government increased the fiscal deficit, almost doubled the fiscal deficit, took on spending, and housing in tier 2 3 cities prices are 2x 3x 4x. What happens when we see unprecedented surge in the housing prices? People took on leverage to speculate, and as a result the we get a huge increase in leverage. So in China, the private sector debt to GDP ratio today stands at 300%. In India, that is around 60, 70, around 50%. So you can see a huge leverage was taken, and that was utilized in the housing sector. And even the state governments, the local state government, you their model is very simple. They used to sell the land to the housing sector, to the developers, garner that money, and then spend that money. So since that dried up, their revenues dried up, and they are also struggling as well. We call them the local government financing vehicles, LGFPs. That is the shadow banking debt that they have undertaken. So we encountered this in 2018 post DHFL. Our shadow sector was impacted only because the housing sector was stagnated since 2014. So we need to focus on this, that we don't take leverage going forward, immense leverage. See, leverage is good. It acts in both the ways. It's a double-edged sword. It's good as well as bad. If you took in a certain parameter, you don't exceed the threshold, it is good. You will have increase in profits manifold. So profits will increase 2x 3x. But when you take unprecedented leverage, it becomes too bad for you. So I think we should focus, the government should focus, the RBI should focus, that even the recent steps that RBI has undertaken for the AIF sector and the NBFCs, that the PSU banks are lending too much to the NBFCs, and that is a kind of evergreening of loans they are doing. So the central bank should be prudent, the government should be prudent. We should be, as Sagar said, fiscal on a fiscal consolidation path. So we have FRBM Act in India, that is the Fiscal Responsibility Management Act, that focuses that states and center should uh, uh, agree adhere to a minimum fiscal deficit, not exceed that. But again, you have populist measure in state, so the state finances are bad. So when we have elections, they announce so many soaps, and that increases the fiscal deficit. So even states should be fiscal prudent. If at center we have 3.5% is the
Mm.
threshold, we will not cross that fiscal deficit. But if states are spending like 7-8%, if they have revenue deficits, that will be also not good for the economy in the long run.
Mhm.
So we should be fiscal prudent at center level, at the state level. The private sector should not take leverage. We saw what happened the last time. We got too many bankruptcies. Groups like ADAG Group, groups like I won't take all the names, but as you know, many groups faced bankruptcies last in the last cycle. So these two or three things, I think we should take from China. We should learn from China so that we don't end up there.
Just to add to that debt and bankruptcy point of your saga, so can we say that it is good that now, as you mentioned, the bankruptcies that has happened, so a lot of bad debt has been covered up, and so the probability of a big boom like how China happened with Evergrande, so that probability is considerably low for India since, as you mentioned, the bankruptcy and all the bad debt has already happened.
So yes, for this we look at the bank's balance sheet. So
Hmm.
PSU banks, where the problem lie, because if you are not prudent in lending, if you
Correct.
lend, so what happened? Just to give an example, in 2010-11, what was happening?
Hmm.
If you had a property of say 10 crore rupees somewhere, you wanted a loan of 20 crore rupees. We have a LTV ratio, loan to value
Yeah.
ratio, right?
Yeah.
So you need to adhere to that. It should not exceed 60, 70, 80% at the max.
Right.
So people were lending more than that,
Hmm.
120, 30%. So
Hmm.
after Raghuram Rajan came, he was the
Hmm.
governor at RBI. He
Yeah.
took steps to clean the bank's balance sheet.
Hmm.
Today, as we all know, that the gross NPA ratios system
Uh,
wide and even for the PSUs, net NPA ratios, they are now
the
reporting
lowest.
profit. It's too low, right? And they are also
Hmm.
giving dividends. So the bankruptcies is behind us. Since I
Hmm.
said that we are in a housing cycle, so we are in,
Uh,
that is for sure behind us, and I think the bad debt is now cleaned from the system. But
hmm.
again, there are concerns about the unsecured loans. So just taking the figures, unsecured loans have grown 3x in the last 2 years, 3x,
Okay.
three times. So as a whole book, you will see that the percentage is very low, but
Hmm.
in the
Uh,
absolute amount, nominal amount, it has grown 3x. So that is why RBI is now focusing that they should be prudent in lending, and that is why you have seen even the regulations, that the
yeah,
Paytm
yeah.
incident that we have. So if we have a very strong central bank in India,
Hmm.
and even the government takes steps. So we have got the NCLT laws that the Modi government passed that helped the recovery, but again that has also taken a long time. For suppose some NCLT cases are still stuck after 5 years, and
Hmm.
the liquidation value is too low, around 5 to 10%.
Hmm.
So we the laws have been made. uh, in 2014-13, we didn't have any bankruptcy laws in India. They were very
Right.
weak. We had on the SAPESI Act, but we have
Hmm.
got the laws as well. But now we need to implement it, and we have to see that the processes are
Hmm.
followed, and the time taken is in line with what happens in the West.
So not only on fiscally, but monetary discipline should also be at the
Yes,
focus of the growth. Yeah.
right.
Correct. Correct. And coming to the more macro point of view, I got another couple of questions related to the labor force participation, which of course you mentioned how we can overcome that with the labor reforms and all those things. But it is still comparatively still low, and not only to China, even to some other Southeast Asian country, and particularly in that female participation, because in that factor we are even below Bangladesh. So how can that the government should address that? Because if I understand correctly, that will be the foundational problem that India will face in if the growth trajectory that we are projecting that will happen. So that, and also other question. about the productivity factor. Like even if the labor force participation is right, the productivity factor is
Yeah.
significantly low.
Am I audible?
Yeah, yeah,
Yes.
yes, yeah. So the basically 2 points: the labor force participation, especially in the female,
So I missed
and
that. I think there is some
uh,
connectivity issues. What did you
so
what
now
did
am I
you
audible clearly?
said after the productivity thing? I think
Uh,
connection got lost.
so am I audible clearly? Hello.
Wait, I think
Yes.
there's an internet issue
Yeah.
on
Now
Sagar.
you are.
Yeah.
Yeah. Now am I audible, right?
Yeah. Yeah.
So the labor force participation point, first of all, because it is still comparatively low, not only to China but some other Southeast Asian countries, and the female labor force is even lower than that. With countries like Bangladesh has even higher participation than us. That and also the labor force participation coupled with uh, he's gone. I am not asking, yeah.
कहते
अरे
थे कि
भाई,
तो काफी लोग
it's
चले
a good
जाते
question. It's a good question.
Wait.
हैं
We
बेचारा
have to
2 बार
cut.
Connectivity issue.
चले
go
गए.
go
Address the first question about
Huh.
the female participation and labor force participation.
Correct.
It is very interesting, but India has a entrepreneurship kind of spirit Indians have basically. So that is why we also have a lot of startups in our country. So
Okay.
that is why if you see that Modi government launched the Mudra scheme.
Hmm.
So these Mudra loans are
Okay.
a very small ticket size loans up to like
Hmm.
say 1 lakh, 2 lakh, or 50,000, depending on the area that you are giving them to.
Mhm.
Right. So this Mudra loan beneficiaries are women in rural areas. So the
Okay.
traditional jobs they do, they undertake
Hmm.
loan and they have their own businesses.
Okay.
So first of all, there is some lack of
Hmm.
data on this part as well. But I think that if you
Hmm.
see businesses in India, women can do a lot of things. First was this part. Second part, as we become a rich nation, rich in the
Hmm.
sense of per capita GDP, right?
Right.
So we will have some cultural changes in our country
Hmm.
as well. And as the gap bridges between the urban and rural areas, thanks to social
Hmm.
media, I would say it has bridged a lot.
Hmm.
This labor force participation rate will gradually increase. This is
Okay.
not an overnight thing that will happen. Rome was
Yeah,
not built in a
definitely.
day. Okay,
Hmm.
but it will take years, but it will happen,
Hmm.
and we will see that labor force participation rate will increase more in urban areas first, and later
Hmm.
on in rural areas.
Hmm.
For the productivity factor, I would say that, as I mentioned earlier as well, the skilled part, we need to develop skill institutes. As of today,
Hmm.
we have ITIs for the
Right.
training purposes, right?
Hmm.
But we need to have that on massive scale. And as we are moving to a
Hmm.
AI world, we need to have that as well in the curriculums of these. But since we're talking about
Right.
manufacturing sector also, so we will
Huh.
have robots as well, and for that
Hmm.
you need to have skill imparted
Hmm.
in the labor force. So I think we will
Right.
move that in that direction gradually
Hmm.
in the next
Hmm.
10 to 15 years.
Hmm.
First, it will happen in urban areas and then in
Hmm.
rural areas. And third thing, government is promoting the business. We have a business acumen,
Hmm.
Indians, right? So
Right.
the government is also silently promoting that as well.
Hmm.
Via Mudra loans, via empowering the women in the rural areas, via different schemes like Beti Bachao
Huh.
scheme in North part in Haryana. So they are taking steps, but it will happen gradually, and I
Hmm.
am sure it will happen one day.
Okay. So there are basically multiple ways, not only the employability of women, but also making them self-reliant. So MSMEs that will
Yes,
also, yeah, right, right.
exactly.
I think tech
Okay.
also plays a large part in the productivity factor, right? And there's
Okay.
a sort of natural tailwind that you have because of how, because of the velocity of advancement in tech.
Hmm.
Um, so that would also, I think, just keep adding on without so much effort.
Right.
Um, yeah. But if you had to put a prediction, Sagar, for example, from current GDP per capita of India, if you had to take a whatever informed slash educated guess on when we'll reach $10,000. If you had to put a year to it, what would your bet be?
Well, it is very challenging to put a date to that, but I
Year.
think we need a proactive, proactive government, and the kind of mandate that the current government is expected to get in
Hmm.
this elections, and the majority that they will have in Rajya Sabha by 2026 and 7, as many market pundits are anticipating. So, if everything goes well, and we also have a multipolar world today, so if we are
Mm.
not engaged, our neighbors are very like eager to engage in a warfare, right? All the
Yeah.
neighbors. So that is also plays a factor. We don't need to have our resources on that front as well.
Mm.
As now we are engaging in a war, and everything here gets
Yeah.
disturbed, right? So there are
Hmm.
multiple factors to it, but I think if we move on to the path that we are moving, the crude remains at the same range, because we import a lot of gold and crude,
Mm.
right? So we will get there by 2000, between somewhere 2030 and 35, I would say. In the next 10 years, 8 to 10 years, we should get there.
Wow.
Wow, that's
Wow,
aggressive. Yeah.
that's good. I was hoping more of a 100th Independence Day, but now that is
See,
20.
China got there.
uh,
China from, as I said, China
huh,
2000 to uh,
12,000.
11,000. I said 2015. So it took 15 years, right? And
Mm.
they had
Yes.
around 8 to 9% GDP growth.
Mm.
And also, when we talk about per capita GDP, it is in USD. So the
Huh.
exchange rate also matters a lot, right?
Right.
Yeah.
So, as I said, multiple factors are involved.
Yes.
Uh,
Mm.
so I'm expecting rupee to not depreciate the levels that we got in the last 15 years. Again, there is a gray
Mm.
part, because people are now talking that Chinese yuan will be depreciated to help
Yeah.
the Chinese economy. If
Exports.
that
Yeah.
happens, INR will also be depreciated hard, right? So that will
Mm.
now, maths will shift to 2025, 35 and 40. So a
Yeah.
USG value also, I think that is also a gray part in this.
Mm.
Right. Have you, in the last year or two, fallen in the China trap? Because there
So,
was a time the China trap.
so
I mean, China
I would.
like a consensus bet at some point, right? Especially when inflation was so high and monetary policy
Mm.
regression was at its highest, and people were like, obviously, China will do well because they will. There'll be an expansionary monetary policy, and it's at the worst ever, and valuations are so cheap. Um, did you fall for? I mean, what's your view on
So
that?
I would give you some figures, and you will be surprised, basically, because the narrative is so bad about China today that people are forgetting that what China is doing. The
Mm.
number of nuclear plants that China is building today is more than the whole world has built till today, right?
Mm.
First, the number of electric vehicles that BYD is selling, the
Yeah.
largest electric vehicle, is
The
now
one.
more than Tesla, electric vehicle
Yeah.
company in the world. The number of the solar capacity that they are adding in gigawatts is more than what India has built till today. That is the every year number. So China is diversifying from manufacturing to sunrise sectors, and they are hoping that the economy will move to a consumption-based economy. Like that is a separate thing that we'll talk later on, right?
Mm.
But they are doing, and one figure I want to quote as well, that one fund manager I heard in China, in Shanghai, gave a return of more than 120% last year. You know why? Because he focused on these companies, the sunrise
Oh.
sectors. So in the whole bear market scenario, we also have sunrise
Mm.
companies. Now,
Right.
talking about me, I initiated a China position last month in January, and
Oh.
just for a short-term bear market rally, because whenever Hang Seng is this much sold, and the
Mm.
kind of Chinese support that the Chinese stimulus that we are witnessing, we can easily get a 30 to 40% bear market rally. Since we are
Mm.
in a structurally bear market, and we have seen that in Japan, it took 34 years for the markets to reach
Mm.
that peak. So I'm not saying that we are going. I am so bullish about China in the long run, but you need to be company specific. I initiated a position in the last month in one of the Chinese companies which has overtaken Alibaba. It has doubled its revenues in last 2 years.
Mm.
Profit margins is now 35%. So there
Wow.
are companies, but you need to be stock specific in China today.
Mm.
Makes sense. Yeah, there was an interesting point on the consumption bit you made actually. Even from the India debt tripling perspective, that's I think the unsecured lending that's more credit card oriented and
Mm.
consumption. Um, so how do you see that migration for China? And even if you could talk a little about India's just about started journey in that whole consumption space.
Mm.
So in last year, 2023 January, we got the Chinese reopening, which was very delayed, basically.
Yeah.
COVID reopening. Everyone had in 2021 and 2022 the max. And it
Mhm.
was expected that the Chinese people will spend all their money that they have accumulated during COVID and get a we will get a huge boom in the Chinese economy, right? But they miss that the consumer sentiment is so depressed that they didn't spend at all. Still, they have a lot of money. So what they were doing in the last few weeks, you'll be very surprised what they were doing. They were buying Japan. The Japanese index, if it was at 36,000 Nikkei, they were buying it at a 20% premium. Can you believe that? The ETFs, the foreign ETFs, like we have in India, we have the Hang Seng Bees, right? The
Mhm.
ETF
Yeah.
that tracks the Hang Seng market. The
Mhm.
ETFs in China that track South Korea, Japan, and the US were trading at 15 to 20% premium. As I said, suppose you are living in India, 20 years, Nifty didn't go anywhere, right? A housing
Mm.
market is down. You can't invest in crypto.
Right.
You can't money send abroad without the permissions. What will you do? You will find any avenue that you can to invest. And one more thing, the deposit rates are at the lifetime lows. You are now earning
Mm.
only, I think, less than 3% keeping in bank in China. So what will you do? You have to plan for your future. You don't have social security net as well. But again,
Mm.
the consumer sentiment is depressed. They are finding avenues, and that is why some people also, some market participants also believe that they are using ways to invest in Bitcoin, the other ways that they can, and that is why we are seeing a huge run in Bitcoin as well.
Um,
So I say I hope that they also had an India ETF and we could have some
yeah,
India
yeah.
related in China.
I was just gonna say that.
So they don't have India ETF. Basically, the way we engage with China, that the war, the China, the Doklam situation, the Ladakh
Mm.
situation, and I don't think we will have India ETF in the future as well. That
Uh,
is a separate part. But talking about India, a lot of people missed again two, three things about the consumption-driven spending that we had. First, we had a shift from goods to services post-COVID. So everyone wanted
mm.
to have revenge spending, revenge travel, and everything, right?
Mm.
Second thing, in India, the second thing is the nominal spending. The inflation increased by actual inflation, not talking about the government numbers,
Mm.
20 to 30 or more than 30% as well for some products in India. So that also, if I'm saying 3x in unsecured loans, that is nominal. So real will be less. And even for
Mm.
every metric that we take in the loan section, right? Third
Right.
is the buoyant stock and housing market. So suppose
Mm.
you invested, everyone actually invested post COVID. They were sitting at their homes and you got a return of 100, 200% in some stocks. More than 3,000 stocks doubled in the last 1 year, the small cap index, right? The mid caps and small caps. So some people are selling the portion of the profits. The housing market, as I said, has increased 3 to 4x in the tier 2 and 3 cities, especially those markets where we have new airports and new expressways.
Mm.
So when you have such an economy where housing is getting 3x, stocks are getting 2x, you have got you we use a macro term that is positive wealth effect. This plays into the economy and that drives consumption. Today, if I get a bear market in India, stock bear
Mm.
market in India for the next 2 years, you will see consumption going down because the sentiment will move down. People will not.
Sentiment.
Now, suppose you have a house, okay? You invested 2 crores 10 years ago. आज वो 8 crore का हो गया. You will be so happy that you will spend your money. You're getting
Mm.
your salary, you spend 80%. But if your house is 2 crores and you have paid 50, 60, 80 lakh rupees EMI on that, you will feel, yeah, nahi, I will keep the money in bank. I will not spend. That is the wealth effect that I'm talking about. So the wealth effect also played a lot of part in the consumption, and I expect now markets to normalize. We'll not get a 2x in housing from here on that we are sitting today, right? will not get a 2x in the stock markets, considering the valuations. So that will also wane, and that's why we are also seeing some stress building up in the unsecured portion of banks, less than for the portion which is the less than rupees 50,000. So I think the max we have seen, the consumption that we have seen in the last 3 years will not get same percentage increase going forward, immediate forward 2 to 3 years. We'll get some
Mm.
mean reversion around, if we were going 25, 30, 35% for unsecured loans, for the consumption, for real retail sales, that will move down to the normalized normal GDP plus inflation, 6 to 7. Sorry, real GDP plus inflation, that is 6 to 7% plus 6%, 13 to 14%. We'll move back. Mean reversion will happen.
Interesting.
So where should the money go?
Mm.
Where to invest?
China
How would
will.
I
you?
think
Huh?
I think we should have a diversified portfolio, right? So
Yeah.
gold should be a big part, considering the amount of debt that US is now, the
Mm.
headwinds that US is undergoing, right? Gold has not boomed in USD since last 3 to 4 years. In INR, we are very happy कि हाँ बढ़ रहा है, but
Mm.
actual in USD it is still at $2,000.
Yeah.
So
Right.
gold should be a major part in the portfolio. One should invest in debt because we will have lower bond yields in the next 2 to 3 years. Market
Mm.
gains will be good, and then I think banks need FDs. They need deposits. Put some money
Mm.
there as well. Reduce your equity exposure, especially small and mid caps. Don't stop your SIPs, or I will get a lot of comments video from people. And do diversify in foreign stocks as well. That helps because in the long run, what I still think that Chinese yuan will depreciate and even INR will go to 115, 20. It will be a gradual, not a 2013 or 2021 type of movement in INR. What,
Mm.
2, 3, 4% annual. So that will help you if you invest in US or any other global markets that I write about in my blog.
Brand
Mm.
plug
You should be well
indeed.
diversified, I think.
Yeah.
Yeah. No, the international equities point is very valid, right? I think it's just 6 to 7% on average depreciation so far every year.
Mm.
Um, it's just been you just invest money and let currency do its job.
Yeah.
Um,
Yeah.
that's
And see that from macro perspective, you see we have twin deficits, right? So we have current account deficit, we import more than what we export, and then you have the fiscal deficits. So,
Mm.
and we will remain so. I don't expect that oil will go and I mean, people say we are undergoing green transition and everything, but the kind of
Mm.
growth that we are witnessing and that we will witness 6 to 7% GDP growth, oil demand will go up. And unfortunately, we are not a nation where we have ample oil reserves. So, and we also love gold a lot. I also personally love gold a lot. So, we'll keep on importing that as well.
yeah.
So I think we will have that 20% problem. INR will continue to depreciate, but it can be lesser than what we have experienced because we have now a lot of forex cushion with us. 700, sorry, $630 billion of $630 billion of reserves.
Mm.
But yes, I think we should surely, definitely have the foreign portfolio as well.
Yeah. No, no, makes sense. Within equities, at least our positioning has been pretty aligned with a lot of what we spoke about. Just favoring or siding into companies that directly benefit out of any government initiatives. Um, Structurally, defense and infra and all of that. But also, I think shifting a lot towards private capex as well. So we're seeing a lot of these mid and small caps. Good companies not take up too much leverage, expand capacity, have specialized products which not only replacing China but sort of attending to the global demand. So a lot of pockets still left of prudent valuations as well. Actually,
Yeah,
few
that's the
pockets,
main thing.
not too many, but I think it's at least a time to be very selective about stock selection from a bottom-up perspective.
Yeah.
Yeah, and then of course banks and lending. That finance in GDP per capita is not going to happen without, or
Correct.
the manufacturing thrust also. You need private capital
Yeah.
and
I
lending.
think it all boils down to valuations. Now we are heading to a place where we will have global banks. By saying global, I mean the valuation of our banks, top private sector banks, will be in line with the global banks. So the
Hmm.
valuations, considering the growth, so you don't expect HDFC to trade at 4 times book forever. Okay,
Correct.
it will someday move down. Indian growth will also move down to 4 to 5%, and the valuations will also move down to 1.7 or 1.5 or 2x that we see in the West, like JPM.
Hmm.
And these JPMs, if I talk about global bank, the US banks, they are global in nature. They derive a lot of income from
Hmm.
other sources as well, basically from the fees that they generate from M&As and everything that they do. HDFC Bank will be an Indian bank only. It will not be a
Hmm.
global bank. So only a domestic focused bank. You take history out. China, Japan, even Japanese banks are global in nature. Okay, only
Hmm.
domestic, and we will always remain, except our IT companies, which have global operations, and maybe in future, say Reliance Industries or Bharti Airtel. Not talking stock specific, just talking the nature of their businesses. Most of our business will be domestic in nature, and domestic focused businesses always move down the valuation in the long run when we move down in the
Hmm.
when our GDP growth moves down, right? So
Correct.
if you are a very long term investor, 20, 30, 40 years, you have to keep that in mind as well.
Yeah,
No. Good point.
awesome.
Yeah.
Do you want to
Good.
do a brand like edit this idea?
Yes, please. I think considering how much value we've received in terms of knowledge about Chinese markets over the past 47 minutes, it's only fair that we take a little bit time out to allot to Sagar and you let us know what Marquee does, how well the newsletter has grown because I've been a reader for the past 2 years now. So I've gained a lot of immense knowledge from it and I use that in my writing as well. So I think the readers or the viewers need a little bit of that Sagar Singh Setia intro.
Yeah. So the last 2 years, I've grown to 3,700 subscribers on the newsletter,
Wow.
and I basically focus on global macro. So we have got very few writers that focus on the global part. So you have got US focus, you have got India focus, you have got Europe focus. I focus on all the major markets,
All
basically Europe, Japan, US, and the emerging markets. And China is the main focus in the emerging market. That is because our world post GFC got connected. What Bank of Japan does, what the Federal Bank does, or what the ECB or BOE does, they
Hmm.
move in synchronization. It's not that कि BOG अगर कुछ और करेगा Fed कुछ और करेगा. It is not like that. They move in a synchronized manner, and the monetary policy drives our world, basically our market. And I also use the study. I use business cycle studies focused on US to determine the future trajectory of the monetary policy and markets. And I have a portfolio of today, as of today, 2025 ETFs and stocks focused on the US bond markets, the global bond market, US stocks, and different ETFs focusing on all the major markets, including the emerging markets. We have 4 to 5 direct stocks that I picked last year in my thematic investing series. So I did 3 thematic investing series. One focused on the A&D sector that I'm very bullish, aerospace and defense, considering the world that we have been since the last 2 years after we got the Russia-Ukraine war, and I think this will be a theme in future as well.
Yeah,
So the way the governments are spending to bolster their defense capabilities, many companies have seen huge increase in their orders and EPS and the stock prices as well. And the second theme was the luxury theme that I'm positive on India as well. I hold as of now one stock in India, the luxury basket. But when valuations come down, obviously I will hold more than one. I'm looking at 2 to 3 stocks in the luxury basket, and overall you see that top 1% wealth has grown disproportionately in the last 4 decades. And this will happen in the future as well. Even in India, the income inequality will not go away, right? So
Absolutely.
the I think I was reading in the last month or so in Mumbai, 30 to 40% of the total land is owned by only 5 to 6 trusts and people. They own all the major land chunks in Mumbai, right? I think it was an 80 article. So the kind of wealth that the top 1% or the next 4 to 5, top 5% or 10% own will grow disproportionately, and that will fit into the luxury product markets. So we have global luxury majors listed in the US. So that was my second thematic investing scheme. So basically, thematic investing, global macro, and using business cycles to invest all over the world.
That's brilliant. And I think people who wish to learn more about this entire space, we will be attaching a link of his Substacks newsletter in the description below. Do check it out. It's definitely a must read. And also read the blog that we've based this entire conversation on, which will also be in the description. That's been a collaborative blog between us and Sagar Setia, sir. I think this is a good time to wrap up the conversation. We've ended on a great note of all the factors that have helped China led to its demise, and now how India will continue to propel itself for the next 25 years and be the kind of superpower that it has the potential to, all the while providing pockets of investable areas for all of us to hopefully make money out of. And on that note, thank you all for watching. Stay tuned for the next episode, and that's a wrap.